Sylvia's Traders Lounge welcomes you to yet another webinar where we learn, trade, and profit. We shall be giving you trading insights on technical analysis, fundamental analysis, risk management, and trading psychology. Today's guest is Anka Metcalf, and our theme is trading high probability setups from a stocks, Forex, and futures trader.
Welcome, Anka. I'm going to read out your bio and then we will dive right into the webinar.
Thank you. Thanks for having me, guys, and good morning, good afternoon, and good evening.
Good afternoon.
Good afternoon.
So Anka Metcalf is a professional trader with 20 plus years of trading experience in stocks, futures, and Forex, who spent over a decade working in investment banking prior to becoming a full-time trader. She is the founder and CEO of TradeOutLoud.com, an international trading education and advisory company designed to help any level trader fast-track their trading and achieve their trading goals. She's an expert day trader, swing trader, and active investor with a precise approach to daily income style and wealth generation trading, delivering results in any market environment. The strategies she teaches in her courses and her live daily approach to trading provide you with the understanding and the tools to take your trading to the next level. She personally manages her own accounts and shares her market knowledge and trades live every day with her clients worldwide. She is a contributor to many financial media outlets and a well-respected technical analyst known for her precision in determining market conditions and pinpointing market direction with the highest accuracy. Over the years, she has created a unique and highly successful, simple and easy to follow trading system based on multi-layer price support and resistance levels, coordinated with proprietary trigger times, market tempo, multi-time frame alignment, synchronicity, divergence, and a proprietary set of rules that enable her and her traders to be very selective, patient, and find high odds trades with ease and laser-sharp precision. She has translated complicated technical analysis patterns into simple, understandable, applicable methodology that helps traders succeed in a fraction of time and become consistent traders by following her approach to trading. So welcome, Anka. It's an honor to have you on the lounge again for the second time.
It's an honor to be with you guys. Thank you so much for inviting me. I'm very happy to share everything that I know with you, and any questions that you may have, feel free to ask. We're all traders here and we all learn from our experiences.
Good. So maybe you can start off by telling us briefly how you found your path into trading, professional trading for yourself, number one, creating and managing your company, TradeOutLoud, transitioning from investment banking from your bio, and what keeps you active in the markets to date?
Oh, well, the markets are so upbeat, especially right now. We're going into election here, so a lot to keep us on our toes. But definitely, like you said, I have 10 years in investment banking, and I decided to dive into trading and start trading my own accounts. And definitely it's a big change when you go from an institutional landscape to an area that definitely reserves a lot of unknown, because basically you're trading your own accounts, you have to have a different approach. So for me, it was a change in respect to income producing style. So I needed to adapt my trading account and my savings into an income producing style of trading. And I think that that was the biggest challenge to start with. So I came with a lot of basic education, from the markets, obviously, and a lot of discipline. So I always considered trading as a business, and I respected it as a business. I had my trading hours, I had my research hours, and definitely that I was not one of those traders that say, hey, you know what, I'm gonna get up in the middle of the night in my pajamas and see if I could, find a setup. As appealing as that was, I needed to have a structure. And to be very honest, at the beginning, it was a little bit of a challenge because I really didn't have a very defined well-defined plan. I know that I want an income producing style of trading. And at the same time, I wanted to have, you know, my long-term money work for me. So I dove into day trading. So this is something that I've never done before. And I dove into day trading. I never regret a day in my life that I started trading for a living, but it was definitely very challenging. And of course, it was the fear that at the end of the month, you did not have the paycheck. That creates a lot of pressure on you to produce and, you know, to be hands-on and very focused. So that's why I'm saying trading is not a hobby. Trading is a business. So you either get into trading because you love trading and you want it as an income producing style and your long-term money to work for you. So, but there's a lot of work. So I remember that, when I first, dove into day trading, I definitely, it's very, very challenging. And I needed a lot of help. So I did educate myself. I did attend tons of courses online, paid courses, free courses. There weren't many courses available when I started, I have to say. There were very few trading rooms that were around. I remember I was part of a trading room and I was paying about $450 a month just to be into that room. So it was very expensive. Excuse me, and especially to get, the trading education that you need. But it's a challenge. So I accepted the challenge. I got into day trading. It was not all fantastic right from the get-go. But, I made it work. And in a couple of months, I made it work for me. And I started to produce, an income from day trading. And the reason that mainly I love to, to work for yourself is regardless of what's happening in the world, you have the computer at your fingertips. Excuse me. Just get a real sip of water here. Okay. So how TradeOutLoud came about, it's very interesting because I was a trader. I was not thinking about teaching, but it happened in 2008 when the financial crisis started here into the US. And I saw a lot of my friends and a lot of my acquaintances that were having financial issues. They lost their jobs. So they came to me because I was thriving. It was a moment where I was thriving. There was market volatility. There were a lot of trading opportunities. As traders, we trade to the long side and we trade to the short side. So there were a lot of opportunities. I wasn't scared that the market was going down because we were capitalizing on the move down. I remember waking up, in 2008, and as, weird as that may seem, the plan of the day was to short Lehman Brothers because I was day trading at the time and we were shorting financials and we were shorting everything. So, long story short, a lot of these individuals came to me not for advice, but for, let's say, curious to see how I'm making my money because they were out of the job. So I started educating traders. At the time I lived in Detroit, Michigan, that was hugely affected by the impact of the 2008 financial crisis. And I remember 1 out of 3 houses in the area where I live were in foreclosure because most of the individuals here were working for the big auto companies here, for GM, for Ford, etc. So it was very challenging. So I did educate pro bono. For 2 years, I was sharing my trades, I was sharing my knowledge, and then all of a sudden, this is how TradeOutLoud came about. So after 2 years of educating individuals, I pretty much decided that let's create TradeOutLoud, and this is exactly what it is. I was trading out loud, so I was sharing, all my trades and all my education with my friends and with all my acquaintances.
All right, thank you for that brief history into your trading. And you tell us that you're a day trader. You've told us that you're a day trader. And also in your bio, you're also a swing trader. So maybe you can tell us the difference between those two and why when you talk about day trading, you see it as an income generating style of trading. And then for swing trading, you see it as wealth generation over time.
Absolutely. There is a big difference between day trading and swing trading. Day trading is when you execute the trade within the same day, you stay in the trade for a couple of minutes or a couple of hours, then you're out at the end of the day. And you have access to your cash at the end of the day. You don't have to worry overnight about what's happening in the overnight markets. You don't have anything invested. So it's a different style of trading. You're in and out positions, in a matter of minutes or in a matter of hours. Where swing trading and even active investing, you have your capital pretty much locked into the market. So if your usually positions are held from a couple of days to about a week or 2 weeks, then it's definitely up to the market to see, how long you're going to be in that trade, how long that follow through is going to continue, or if you're getting follow through. In a stale market environment, you could actually be in trades for a very long duration of time. So if you guys recall, if you were, trading and any of us in here that were trading in 2015 to 2016, right before election, we had a very rangy market where everything was stuck into a range. So we didn't have the expansion higher or the expansion lower. So we were holding positions at that point for months and months. So even if you're in a swing trade, but if it doesn't move your way in, let's say, a week or 2 weeks, you're pretty much stuck in the trade and your capital is stuck. So you cannot pull money out of that account because definitely you have your money locked up in all the positions. So I think that, there's a really great balance. And when you start trading, I think that, as you learn how to trade, I think it's a great idea, to day trade, but also to swing trade, because you can have your long-term money work for you as you're day trading. So income producing style of trading, you're day trading, and swing trading, you're letting your money, capitalize on major market moves, bigger swings, bigger time frames, and building up your nest egg. So that's great to have, two trading styles. One of the things that I think is very important to notice, especially for individuals that are day traders and swing traders at the same time, is that they need to have separate accounts. Because if you find yourself, if you're putting your day trading hat on, and if you're going to say, hey, you know what, I am going to day trade, let's say the euro dollar, or I'm going to trade the E-mini Dow, or I'm going to trade Apple stock, day trade Apple stock, you're going to be tempted to look at every single penny and every single tick or pip that is moving into that up or down. Where if you have your swing trading account separate from your day trading account, you pretty much set the trade and forget about it. You have your clear parameters, your entries, your stops, your targets, you set up your alerts, and don't look at those particular trades, because oftentimes a lot of individuals that are day trading and swing trading, they often have the tendency to over trade and to over manage their swing trading accounts.
All right, so maybe we can go back to your history. What lessons did you draw from investment banking that you apply to your trading account, both as a day trader and for investment as a swing trader? And, while you're trading stocks, futures, and Forex.
Okay, so the number one thing that I've learned is discipline, risk management. And I think one of the most important things is to treat trading as a business. So it's something very serious. And I always, say this to my traders and to everybody that, wants to get into trading, is that when you decide that you want to trade, you have to make sure that you like what you're doing and treat it as a business. It's not something that you should take it lightly. It's definitely a life change. You're going to develop skills that you were not even aware or capable that you're going to acquire. So I think one of the biggest things in trading is, finding that balance between work and, your life. Because after all, it's just a business. I know a lot of traders that are diving into trading, and I was once there. And I would wake up at 2 o'clock in the morning so I could catch the London session open when I was trading Forex. And you basically have the tendency to overtrade and to be present in the market all the time. And I found that the more you treat it as a business with a fixed schedule, let's say I'm working, I'm working from, let's say from 9 o'clock to 12 o'clock, or I'm working, from 11 o'clock, because that's how my schedule permits, to 4 o'clock, or, whatever it is. The thing is that, you have to have that really rigorous schedule. Basically there's a life outside of trading, and I know it may seem very hard because whenever I meet traders, all we talk about is trading. But you have to find that really good balance. And the one thing that I think the one takeaway is risk management. Risk management is very important. Position sizing is very important. Very few traders, emphasize on position sizing, emphasize on risk management. They are all looking, and we're all looking for that perfect setup, for that perfect entry, for that great achievement into targets. But a lot of times, this is a topic, position sizing, risk management is a topic that is not really tapped into, especially when you begin trading.
All right. I'll welcome my co-host Gilbert to ask a few questions.
Hello, Anka.
Hi.
So I have a question for you. How long did it take you to become consistently profitable? And what can you attribute as your turning point from losses to consistent profits?
It's it's basically a rule-based system. The moment you understand that it's a rule-based system, you're going to obey the rules of the game. And how long it took me, I was very fortunate. And I love talking about this topic because when I first started trading and when I was trading in the institutional field, I had my mentor that told me that it would require about 3 to 4 years before I really become a professional trader and before I could become a really good trader. I didn't understand it at the time because in the first 3 months of trading activity, I was doing really well. I was an overachiever and I had a really great performance. However, down the road at about a year and a half, and as 2 years came by, and I still hear his voice and saying, you're not going to be a really good trader unless you have, 3 to 4 years under your belt. And now I understand why he said that. It is because you have to go through different market cycles. So you have to go through crisis in the market. You have to go through ascension in the market. You have to go through these all different aspects in the market. And the market is so complex because you need to learn how to trade within yearly cycles, first quarter, second quarter, third quarter. We're now in the third quarter of the year. And this is the quarter where this quarter has a different vibration, and it definitely has a different texture to it compared to the first quarter or the second or the third. The fourth quarter is actually more dynamic. The fourth quarter, for instance, October, where we just started the month, is the most volatile month of the year. The fourth quarter is also the quarter with the most volume into the market. Everybody's tapping into the market. But to return to your question, it varies from person to person. How fast you get to consistency. For me, it was about for 3 months. And that was because I was fortunate and I had the mentorship that would not allow me to fall off the wagon. So I had constant assistance every single day. And I had the information that was literally drilled into my head every single day of what I need to do and what I need to focus on, what I need to, how I need to position size, how I need to look for my setups, how at the levels that I need to watch. So I had a lot of assistance. So I went basically from from those 3 months where I would like grow a little bit my account and then stabilize it and then was able to grow my account. But I hit a road bump. And I think it's very important to talk about this because in today, and especially in today's world, where a lot of traders have a lot of information, they tend to be looking for the holy grail, look for something that is going to simplify their life, look for that special glittery indicator that is going to tell them exactly what they need to do. I was the victim of that. And at the time I was, shortly after I became a professional independent trader, so I was becoming a retail trader, and that was about 17 years ago, I discovered that there was a service that would provide me with news before it hits the wires. And I obviously subscribed to that. And my account took a hit because instead of being focused on the patterns, on my structure and everything that I've learned from my institutional years and transitioning into my retail, I found that my account was declining, and that was because I was taking news trades and I was trading the news. I was focusing on something else than focusing on my strategy. So my advice to traders is to stick to the strategy that you know. Obviously, make sure that you take notes, and every single time when you take a trade, make some notes, write the time of the day when you took the trade, write out, the market condition at the time, etc. So at the end of the month or at the end of the quarter, you could do a self-assessment of what works and what does not work for you. And it's a quick elimination at the end of the quarter or the month of what does not work for you, and insist on the things that are working for you. So I think that I was, one of those fortunate traders that I had assistance. I had a constant mentor for years that did not, let me fall off the wagon, even though I tried, but I got back up. But I would say that, if you're very serious and if you have a mentor, definitely you can make it work the second month. The first month is a little bit overwhelming because you have to get used to obviously the market and everything that is around. You have to even learn the platform, which is definitely a big component of trading. And I would say 2 to 3 months, you should be on your way. If you're not really trying to get into the break-even spot, or you're having difficulty after 3 months, then it's back to the drawing board and back to education. There's something that you need to improve. And it's a start. With trading is always a start. Every day is a new day in trading.
All right, thank you for that. I had also one more question, and this is with regards to how you split your accounts. Like, you have 2 different strategies. You have the day trading strategy and the swing trading strategy. Is that something that you carried with you from your days in the institutional trading when you were trading with investment banks and hedge funds? Or is it something that you gravitated to naturally, realizing that you cannot keep on taking everything that you're making? You cannot use all your profits for expenses and not plow back some of the profits so that you can grow your capital over a period of time?
Okay, that's a great question. So I do have strategies that can be applicable in any market environment and on any time frame. So the strategies that I trade are the same. The only difference between day trading and swing trading is flipping to a different time frame. And if we have time today to flip through some charts, I will show you exactly what I'm looking at and how this strategy is actually a very simple strategy. I try to simplify everything because I know there's a tendency in trading to overcomplicate things. And a lot of traders think that I'm not good enough, I don't know enough. Where if you know technical analysis, basically you do know about 75% of trading. Technical analysis is the core of trading, obviously, and now more than ever, because we are living in a world of AIs where the trading world is dominated by algorithms, and we see what's happening in the market, especially into the futures market, also in the stock market, and of course the Forex market. So all the markets are dominated by algorithms. Algorithms live on small time frames. They do have their program to react off different areas, different levels, et cetera, et cetera. Now, more so they are reacting off narrative. So here in the US, you know, if there is a little chatter about stimulus, the market reacts whether yay or nay. It goes up or down in an instant and in a nanosecond. So learning how to trade technically is the best way to go. I would say that I am a 99% technical trader. But 1% fundamental, because I do trade stocks and I do, you know, I'm not living in a bubble. So I have to make sure that I'm aware of what's happening around me, and I'm aware of, let's say, earnings season. We're starting earnings season next week. So I'm going to be very interested in fundamentals. The market tends to run on fundamentals, especially in the first 3 to 4 weeks into earnings season. And then it damps down a little bit. But definitely you have to pay attention to what's happening in the market and adapt. It's always a game of adapting. And as far as, you know, the institutional side to the retail side, the institutional side is higher time frames. You're, you know, we're looking at a higher time frame span and a time horizon, obviously, and it's not really applicable to day trading, because when you're investing, you definitely, you know, you're definitely having your money work for you, and you're living through all the price oscillations. As retail traders, and some retail traders could not afford to do that. So we're capitalizing on a certain swing, from a swing low to high, just the middle portion of it, or let's say 70% of it, or to the downside. But we're not, you know, living through the ups and downs. And, you know, we're basically, you know, we're basically very proactive in our approach to the market. So it's different. So you would have to learn a different approach. I had to learn a different approach. So from the investing side, yeah, it was very helpful because I was very familiar, but I had to relearn everything from the retail trader standpoint. And that's why I came up with a plan on how to adapt and how to trade my own accounts with different rules, because I needed to have stops. In investing, you don't have stops. Let's say if you're in a stock and if it, you know, retraces lower, then, you know, that's it. We have to wait until it goes back up. So there's no dynamic approach, where in day trading and swing trading, you're hands-on. So that's why I developed a system that would enable me to be aware of these changes in the market and capitalize from that portion. So to capture a portion of the swing, from the swing low to the swing high, or from the swing high to the swing low. So I developed this system with multi-layer price action, price support resistance. And more so, everybody knows about price support resistance, but there's so many layers that goes into this price support resistance. Everybody thinks that, okay, it's supply and demand. Well, the reality is that, yeah, there is supply and demand, but there are also some other levels. There are Fibonacci's, there are moving averages, you know, there's volume, there's some oscillators, there's some, so everything, if everything is a blend into this market, and if the price is pulling back just to a simple support zone, it doesn't mean much for the market. The market needs to, or let's say a stock or anything that you're trading, you need to see, and this is what I look at. I look at confluence levels, where you have multiple levels of price support or resistance that meet at the same place, whether it's major support, meeting with the moving average, meeting with a whole number, meeting with a pivot point, or any other simple indicator on the chart. And then from that point on, if it's executing a rotation, then that is the area where I would look to get into the trade. And I'm also a true believer in you know, confirmation. So I'm not one of those traders that buy off support, because let's face it, if you want to buy off support, the support is the last shelf, is your last safety net. But if that safety net has a crack in it, guess what? The price is going to go down. So you don't have any guarantee that the price is going to hold that support level. So in that respect, I look for a technical rotation. So I look for the red, 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 red. into that support zone. And oftentimes we all know that the price loves to penetrate that area. And then I look for that rotation. So I look for the buyers to come in, take out the prior price action high for the red, take the red out, and then I execute the trade. So also into this system, because we were talking about day trading and what works for me is paying attention to the timing of the day. This is very important for me. And there are specific reversal times that are happening in the market. They're happening in the US market. They're also happening into the London session market. In London, for instance, I can refer an Eastern time frame because, you know, I'm US based. But the market opens at 2 o'clock. Let's say the London session opens at 2 o'clock. You're going to expect a big reversal that is going to happen in the market at 3. Did I say 3 o'clock? Okay, 3 o'clock. That is going to happen at 3:30. So that is often discussed as the major reversal time from the London session. Here in the US, it happens 30 minutes after the US market opens. It happens at 10 o'clock. Trades that happen between 9:30 and 10 o'clock, and the same from 3 o'clock to 3:30, have a very short duration. So if you're a day trader, you need to capitalize within these very quick time frames. You don't get married. You don't get stuck with those trades. You get in and out, in and out. Trades that develop throughout, let's say at after 10:30, you have after 10:30, trades that initiate into that time frame, you can hold as a day trader for about 30 minutes or maximum of 45 minutes. And trades that develop within 11:15 to 11:30, then you're pretty much stuck throughout the whole lunch period and then into the afternoon trading session. So you have to decide which style of trading, you know, suits you best. If you're looking for momentum trades, first 30 minutes of the London session or first 30 minutes of the New York trading sessions are the best way to go, or the first hour, because sometimes if you're getting a big move in the overnight trading session, or a move to the upside or to the downside, you're going to have to wait for some calibration. And oftentimes the calibration, depending on the volatility, can be about 5 minutes or about 15 minutes. And a lot of times, you know, traders focus on the first hour of the day because it's the most volatile, it has the most volume, and then the volumes dies down. And then the second best time of the day is at the end of the session. This is valid for the London session. London session closes at 11 a.m. Eastern. So from 10:30 to 11:30, you're seeing that impulse of buying or selling. And that would be like the last for the London session. And then you're seeing it here in the US as well. And you're seeing this into 3 o'clock to 4 o'clock. It's also called the power hour. And especially the 30 minutes, you know, has the most volume of the day. It's equivalent to the volume of the morning. So the first hour is equivalent, has an equivalent of volume to the last hour of trading. And over the years, I have developed trigger times. And I found that, and this came from my own research, from my own trading, you know, from years and years. Like I said, you know, I've been trading on my own accounts for over 17 years. And I found that it is very interesting how certain setups start developing at certain times of the day, like clockwise. You know, one of my favorite times, and I call it prime time trigger time, it's 10:30. And I correlate this time frame with 5-minute charts and 15-minute charts. And I look for those technical rotations. So it's all about putting everything together, because trading is not about one strategy. It's not about the setup. It's not about, you know, where you place your stop and how good you are at determining targets or whatever. It's about applying everything, multi-time frame analysis, the mindset, which is super important into trading, and your technical analysis skills blend all together. And of course, these trigger times are very important for me. Like I said, 10:30 prime time trigger time. I'm waiting for that confluence, for the price to come in into my confluence support zone. Let's say if I'm looking for a long, and if I see the setup there, I take it. But if I don't see it, the setup there, I'm not taking it. And as a day trader, I tend to lose interest in the market as soon as, you know, we're hitting the 11 o'clock, 11:15, then I'm pretty much done from the day trading perspective.
All right, thank you so much for that explanation. Then also tying into the multiple time frame analysis. So when you're factoring in these multiple time frames, how do you identify higher probability trading setups, and why are the technical levels of such setups ideal for traders?
Perfect. Okay, so anything you do in trading is all about multi-time frame alignment. So when you start your analysis, you have to start with the highest time frame and zooming into the smallest time frame, and that is the time frame that suits your trading style. So what I mean by that, if you're a day trader, I always start my analysis with the monthly chart because it has a big impact. Monthly chart correlating with the 1 minute chart. Let's say monthly chart correlated to the 2 minute chart. Why? Because if you're getting a continuation pattern, or if you're getting a setup that is just about to trigger on the monthly chart, and if you're seeing let's say a range on the 1 minute chart or the 2 minute chart or the 5 minute chart, you can imagine that that becomes a high velocity zone, and that's going to push the price higher. Also, the weekly charts are very important for me in terms of continuation patterns and in terms of setups, because when these higher time frames are starting to line up, then when they start triggering or lining up for the trigger, they create the velocity for smaller time frames. So if you're a day trader, you start your technical analysis on larger time frames every single day. The more charts you look at, the better you're going to become over time. So don't miss out on the weekly charts. Don't miss out on the monthly charts. Don't miss out especially on the daily charts. The daily charts are very important. Look at the trend, evaluate the trend, and always look at the price in relation to the trend. Where is the price located? Is it, if you're using moving averages, it is above the moving average? Is it below the moving average? Where's the price trading right now? Let's say ahead of the New York trading session open in relation to price support resistance. And then dive into a smaller time frame, and I dive into the 1 hour charts, and I evaluate the same things. Is the chart trading into an uptrend or a downtrend? Where's the price in relation to price support resistance on that segment? And how is that 1 hour going to influence my smaller time frames? Because oftentimes as traders, we lose sight of larger time frames because honestly, we're used to trading, 1 minute charts, 2 minute charts, 5 minute charts. And oftentimes there are traders that trade the tick charts. It's very easy to lose sight of higher time frames, where higher time frames are always going to dictate the moves. A lot of times you're going to see a 5 minute sell, but that is in correlation with an hourly buy. So if you're getting a signal on the 5 minute that the 5 minute is entering a sell setup, but your let's say your hourly chart is suggesting, hey, there's a range or there's a buy setup happening there, guess what? And if you're losing money on that trade, then you know why, because you have entered a trade against the higher time frame, because the higher time frame is always going to dictate the move. So if the 1 hour is positioning for a continuation higher or for a buy, you should not be shorting, and you should be looking for the pullback, wait for the pullback, and then short. Because if you're shorting into a really massive trend, and we saw what we have in the futures market, and we see what is happening everywhere, and even in the stock market, if you try to short, you're going to get very little for your risk. You don't know how steep or how shallow that pullback is going to be, and oftentimes it's a rip, your face off going higher, and you don't want to be caught, on these really massive moves against the trend. So always, and this is what I do. I've always been a trend follower, and sometimes I trade counter trend trades on very steep pullbacks. I look for specific setups that I have favorites, and I look for squeezes into small target levels. But I'm very diligent when I do that. And always when I counter trend, I go with half of my risk. So I'm never applying the full risk when I'm counter trading, half the risk, because those are higher risk trades. And you have the instance of stopping out of those trades quite often.
All right, I think now we can go to your live chart analysis of your trading approach, and then you can be able to share your screen for your presentation. Yeah.
All right. All right. So if there are any chart requests, I am here. Okay. I don't know. Can you guys see the screen?
Yes.
Yes.
Okay, perfect. All right. All right. So I could share, what my thought process is. Let's say this is the Yemeni S&P. It's very often traded by traders. I usually have a different kind of approach to my analysis. And before I get to that chart, I just want to go a little bit and share my other screen. Okay. And this is exactly how how my thought process is. All right, so in my screen right here, because I'm a very active day trader, and by very active, I mean I only take 1 to 3 trades a day. So I'm active because I am actively looking for a possibility to, for trading opportunities, but I'm not as aggressive, to have 10 trades a day. So basically, when I start my trading process, I always have my charts on the 1 hour. Definitely, you can see here that I have my E-mini Dow on the 1 hour. I have my E-mini S&P. I have my NASDAQ on the 1 hour. I have oil on the 1 hour. And I do have some notations that I don't have on my other screen. So that's why I wanted to bring them up here. These are very helpful. And I'm going to share with you in 1 second why they are very helpful. These are not simple support resistance lines, but these are confluence areas. These are exactly those overlapped support or resistance spots. And you can see here in NASDAQ, I have velocity zone very bullish above. So that means that if we're going to be getting, and I'm going to be talking about this, if we're going to be getting the price over this 11,600, the price is going to start going ballistically higher. All right, so the first thing that I analyze is actually the relative strength and weakness and the synchronicity and divergency in the market. Sometimes these indices are not moving at the same pace, and we're getting one index that is lagging, and the other indices that have relative strength. So I'm seeing here that the Dow right now, 0.42% up. I have 0.49% up in S&P, 0.49% up in NASDAQ, and 0.83% in Russell. Russell has been outperforming. This is a characteristic of Russell outperforming going into the last quarter of the year. It always outperformed any other stocks. And any other indices, and the Russell stocks tend to behave quite well. And especially they, even if they start slowing down, let's say mid-November to the end of November, they start picking up into the end of the year. All right, so they are very good candidates for window dressing, especially at the end of December. All right, so after I analyze, all these percentages, and I'm having a pretty good blend of relative strength throughout the trading session, I'm not having any kind of divergency into the market. So I'm pretty much done with these charts, because then I'm doing my analysis on the other chart that I will project in just a little while. I also keep gold and oil on my active tabs right here. Oil has been on the daily because you can see here I have a weekly trigger. So from the weekly standpoint, it's just range bound, and it's just triggered. And this is the exact rotation that I mentioned a little bit earlier. So I'm looking from a red to green. So I'm looking for the green to erase the red. And this would be a buy signal for me at the purple line, because this is a weekly trigger. And this is the exact target spot. And this is a confluence level right here of resistance. You can see that the resistance spot would be based on this chart and time frame at $43.87. However, my resistance spot is a little bit lower into the $42.80 that I have here. So this is a classic rotation. We see that this happened before, and we are having the rotation right now. So after I perform this analysis, then I dive into my charts, and I'm looking for my optimum trading opportunity, but not before switching these charts to my 5-minute charts. Always when I have volatile market environments, I shift to a little bit larger time frame than a 2-minute or a 1-minute. That may definitely whip me out of trades. And you can see here how helpful my levels are, because when you're trading, you don't always flip back and forth through charts. So you need to have some indicators, and these are not basically indicators, right? All I'm using here is, you can see that, some moving averages. I'm using the 10 exponential, the 10, the 50 and the 200. These are simple moving averages. So once I have these notations on my charts, and once I have these charts on the 5-minute, I know exactly where the price is, what I need to look for price in order to get into a trade. I'm seeing that the price, let's say it's is riding the 20 SMA right here. So right now the 20 SMA and S&P is my safety net, right? So if the price moves below, then that would damage the pattern at this point. So at this point, I would be looking for a breakout over 55, 56 in order to transition higher. And I do have a target spot right here. I have a dotted line at 3460 spot, and I do have another resistance spot at 3464. So you can see how these levels are, playing, and these levels are really awesome because they give me, a better gauge of what's happening at certain level. Now, I'm going to shift to my other chart right here. So let me know if you guys see it. Okay. And basically, before I get into those 4 charts of the 6 charts, 4 indices and commodities, I always start my analysis higher time frames, zooming into smaller time frames. So here we have a monthly chart. Some traders may say, hey, why are you looking at a monthly chart? Because we're trading a 5-minute chart. It is very important to see what's happening, because let's say if this bar right here would have taken out, or it would be very close, let's say it would be trading at 35.80, we have a high of 87. But if we would be getting into that 87 spot, then I would know that at that point, shorting is not an option, because once we take out this high, the price is going to go ballistically higher, right? And then again, I have a method of determining targets beyond all-time high using projections. And this is, again, something that I know from institutional trading, and that's because no institutions are getting in without knowing exactly where the target spots are long-term. So after the monthly chart, I zoom into the weekly chart. Weekly chart has a very nice pullback. This is a signature pullback that I also teach. This is a 1, 2, 3, 4 into the 50, into the 20 SMA. And this is a full price. This is a full price rotation at this point, where the high is, where this candle is taking out the prior high. This becomes the entry, this becomes the stop, and this becomes the target right here into the meat of these candles. And this becomes the second target. And you can see here how it's really easily following through. Now, if we would have had this webinar last week, I would have told you exactly, and if the price was trading at 32.96, I would have told you that I'm extremely bullish over 33.27. And that is coming from the weekly chart. So you make these notations on your chart, so it makes your life easier. Now, from the daily perspective, we have been in a sideways range for a very long time. We have resistance from the first pullback and an attempt at a rotation. So see how this candle never triggered above the prior high, and we have the 20 SMA as a lid. The price wasn't advancing above it, and it was getting that gyration, that weak gyration from the 20 SMA. And once the price peaked above the 20 SMA, just kind of held. And there we have our safety net back again, 20 SMA. Full price rotation right here. So we had the visit to the 20 SMA. We had the go ahead, but 3 days ago, we did not visit the prior high. So we were bullish into the trading session, obviously, because we had a green candle, but we needed to trade continuity, right? So continuity is very important. This is the high right here of, let's say, 34.18. Once we hit that, look at the candle, full body candle, no wicks, full continuation for higher. And then again, today here, look, we're trading above. So guess what? This is going to be a full bullish day for higher. And again, the targets are going to be predetermined. You can determine them from the daily charts. You can actually use projections for these moves, especially because we're trading onto the daily chart. So you can see here that we would pretty much look for a target into the whole number, into the 3,500. So we have about 50-point juice into the mini S&P, and you can apply the system whether you're trading Forex or futures or stocks, or it is a universal system. And then you would go to a 1-hour chart, and this is my homework chart. And then I start analyzing this. Let's just take these off here so they don't interfere. Okay, let's see, remove, no, not this. Okay, here we go. All right, to have clean, clear charts. So this is a 1-hour chart. Also very important to note that I often look at the 4-hour chart. 4-hour charts are great if you're trading the overnight trading session. This is a carefree time frame. And as you can see here, yesterday we had a little bit of trouble into the into the indices, because you can see this wick here. So we had a really range bound morning. But why was this range bound morning here? Well, because we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles right before the open for higher. So that was 40 hours of continuous move to the upside. So now this is again one of my signature setups that I'm looking for, and this is a bull sandwich. This is red. These are the bears that are caught in between the bulls. This is a signature move. If we trade above, and which we did, if we trade above this high of 34.56 to 34.57 right here, there's the trigger right now. We can apply a stop below this candle low, this red candle low of 45, and we can expect fulfillment back into targets. And then again, like I said, you know, we do have a lot of, elements that we apply and I teach into our classes. You can see that we have multi-layer targets right here. So suddenly it becomes very easy to trade. So now this is from the 4-hour perspective. Then I go directly to my 5-minute, and I'm looking for a buy opportunity without having that risk from the weekly or from the 4-hour. If you're trading the 4-hour, if you want to keep this trade ongoing for, let's say, the weekend or for next week, it's fine to trade the 4-hour. That time frame is going to keep you much longer in the trade. But if you're looking to trade, let's say, the 5-minute or even the 15-minute, you're going to look at your closest support level. So I can still take, here's the beauty about it, I could still take my entry into the 57, but I'm going to put my stop right here at 51 or even 50, because I want to stay away, you know, and steer away. I don't want to give any hints about, you know, where I have my stop. Right? I don't want to give any hints where I have my stop, so the algos don't get me. And I'm going to look for a first target into this prior high of 60, second target into the 34.64, and so far I'm going to manage it forward. So this is how I implement higher time frames to smaller time frames. So I'm in full synchronicity with higher time frames. We got the 4-hour rotation here, which is perfect. We got this was my clue. You got massive support here. And this is from prior price action. It's also a confluence level. So you can see this is not really at the bottom of this. And by the way, these levels are from yesterday's trading session. Okay, so I didn't have time to update them. So we're still trading on yesterday's trading levels. But you can see how beautifully it works. And it works every single time. It's a very easy system. It's not sophisticated. And it's totally stress-free. So this is how, this is how I analyze, and this is how I, walk through my trades. And you can see, okay, 60, right? Right. Bam. Awesome. All right. Yeah.
All right.
Any
cool.
questions? Yeah.
Yeah. So Gilbert will take the Q&A from the live participants. And thank you for your presentation.
Thank you so much, Sylvia.
All right. Thank you so much, Anka. And thank you to everyone who has submitted their questions. So let me start with the first question. What is the pricing to join your trading program?
The trading room is $299 a month, and the trading course is $4,997. Everything is live. I teach the course, and I also trade with the traders in the room. It's actually a spoon-feeding trading room, because I want to see all my traders on the same level, and I want them to make money while they learn. It's very important, because I've been through the same thing. So while I was learning, I was making money, so I was helping him money. This is my way of giving back. And once traders learn how it's done, they have more confidence into the system. And it's actually a very simple system. Like I said, I simplified everything. So it's not overwhelming. It's all about, looking at charts, and everything is common sense. So like I said, the futures courses are live. I teach them every month. At the end of the month, the next one begins at the end of October. It's the last week of October. And it is a 5-day course. We do trading labs. I give access to all of everything, all video related. We do trading psychology. So if you guys are interested, you can visit my website, TradeOutLoud.com. And at the bottom if you go to under education, under day trading, you can actually see what we're teaching. It's like everything from A to Z. So if you have never traded a day in your life, this is the course for you, because it takes you from real beginner to really pro trader. And then you're into the trading room where you're trading with me. So it's assisted trading. I tell you exactly when to get in. So if this was a signal, I would tell you, okay, this is the buy 34.57. Your stop is going to be here. These are going to be the targets. And, you know, as far as management, when we see the price, you know, heading into, let's say, into the 60 spot, we zoom in on a smaller time frame, so we don't give back what we've made. So we can trail, let's say, 58. Right? So we're raising our stops. So it teaches you how to make money, but also how to take really good decision and protect your money and protect your portfolio, so you don't give money back once you're in a good trade.
All right, thank you so much. What pairs do you specialize in, and what determines your selection of markets to trade? Oh,
can you repeat the question? I had a truck passing by.
Oh, sorry. So when it comes to Forex, what pairs do you specialize in? And also when it comes to the range of markets that you trade, what determines your selection for the markets to trade on a day-to-day basis?
Okay, so I used to be very active in futures trading. Right now, I'm actually trading only currency. So let's say I'm trading the euro. Okay. So here we go. So let's say I'm trading the euro. I'm not trading currency pairs, but I apply the same technical analysis. I apply absolutely, you know, same principles, and everything is the same, whether I'm stock trading or, you know, futures trading, whether I'm trading the 2-minute chart, or let's say if I'm doing a swing trade. I apply the same principle. So just as an example, I showed the mini S&P chart. So I took a swing trade. So yeah, I day trade and I swing trade around it. The other way around. I day trade and I swing trade around it. Okay, so basically here, this is the chart of the Dow, and I was telling you about my signature pullback into a confluence level right here. This is a trade that I took. This is a swing trade that I took. So this is an example. So you can day trade and swing trade using the same system, using the same setups. The only difference is going to be the time frame, and the time frame needs to line up with your confluence levels. That's all there is. There's no magic formula. Everything is very, very simple. Once you learn it, you cannot learn it.
All right, thank you so much. There's a question coming in. How do you stay consistent in a volatile market?
That's a great question. So when the price, okay, so I'm going to give you an example here. Excuse me. Let me just squish the chart. Okay. So this is volatility right here. And this came on the news that President Trump said, okay, we're enough with negotiations. They have been going back and forth here on the stimulus plan. And he's like, no, we're taking it off the table. We're done. No more stimulus. So here is no more negotiations, okay? So this is what happens. So this is a tape bomb. Whenever the price is moving so fast, I stay away. So whenever I see, and obviously, you know, in a volatile market environment, you raise your stop. You're always proactive on your trade. You're always in front. You're always using hard stops. You're always, you know, raising your stops. You're having your orders on your broker's platform. So in case something like this happens, you're protected, because even if you, let's say if you went long, and this is actually, okay, this was a very good setup here. Okay, just want to show you. This is a pullback into a support zone right here. We also have the 50 SMA. This price action is also minor support because it's deriving from these prior pivot highs. And we have this rotation that took the price higher, right? So if you were long here, or you have the shallow pullback here into the 20 SMA, this is perfect right here. And let's say you were waiting for higher targets, you're always trailing, because this is a 15-minute chart. Once you got triggered, once you hit your first resistance spot, you're entering active trailing, because this is day trading. You're not in it to live in this time frame. You're taking your money and run, okay? Banking your cash and run. So in order to stay consistent in a volatile market is stay away from the drama. Don't trade the news. I never trade the news. I'm very cautious about anything that may happen into the market at one point or another. And I always protect my capital. Capital preservation comes first before even a setup. So whenever let's say oil, right? I never trade oil on oil inventory numbers when oil inventory numbers are coming out. I never trade on FOMC meetings, around FOMC meetings. I do trade the morning, but I don't trade the afternoon. ECB meetings are the same as FOMC meetings here. They produce a lot of price gyration. I stay away. Also, there's a reason why I specialize in trading just 2 hours in the morning, and that is because from 9:30 to 11:30, and that is because I want to stay away from the big chunk of news that is coming into the market at 8:30. So from 8:30 to 9:30, the market is digesting, is marinating the news, is picking a direction. So I'm going for the sure thing. I really wait for the price to settle before I take a decision. So I would never short this. I would never short this. I would never go long here. I would never go long here. I would never go long here. And in fact, the clue to go long here was on the 4-hour chart. This is where I would go long for the squeeze into my target. So I'm looking for this little gem right here, which is a strategy that I teach. It's called an inside bar. So I hope that, Luluma, I hope that answered your question.
All right, thank you for that. Then there are 2 other questions. What capital would you recommend for a new trader starting out? And also, what is the ratio of wins to losses for your strategies? Like, what would you consider as a good strategy in terms of ratio of wins to losses?
Okay, that is a great question. So number one, right now, the futures market is very flexible. You can trade full-size contract and you can trade micros. Just because, last year was the best thing that ever happened to the futures market. The CME has introduced the micro mini futures, and you could trade them. Basically, one micro represents a 1/10 of the size of the full-size contract. So that represents a very small portion of that really hefty full-size market of that contract. So if you want to trade with, if you want to get in with lower capital, you can, I do recommend in this market environment to have $10,000 to start using micros. It's always very hard when you're trading with a small account, because when you're trading with small account, you're always going to have fear, and you're going to trade with fear. And with full-size contracts, I do recommend $30,000 to start trading with. But wait, there's more. You could also capitalize on funding. So we do work with a company. If you guys are interested, you could shoot me an email. We do offer special deals through us, and you have access to capital. You have to prove that you can trade, and they fund you. And there is a very small fee that you pay every single month. Because guess what? They're providing you the capital. So I guess, it's a win-win scenario. So you can start with 0 risk using a funded account, or you can, open your own account. I do recommend, and I know now you can find brokers where you can open accounts with as little as $500. I would not recommend you do that. That is a recipe for disaster, because you're going to open the account with $500 and then you're going to blow it up. Then you're going to fund it again, $500, and you're going to end up at the end paying way more than $5,000 or $10,000 down the road. So if you don't have the capital now, you could opt for funding. If you do have the capital now, let's say $10,000, you could start trading micros. And this is because of the volatility and because we are into election. But definitely, when everything is going to calm down a little bit, probably next year by February, March, you're going to see that the volatility will subside and the brokers will go down, on your margin requirements. But for now, this would be the required, capital that I would recommend, and that works in the market right now.
All right, thank you for that. So one last question. When drawing your support and resistance levels, what time frame do you use? And which one is the most reliable for you?
Okay, so I do use, that's a great question. I do use multiple layer price support resistance levels. So I trace, because I use Confluence, I look at the daily, hourly, 15-minute charts. This is where I'm getting my Confluence levels of support resistance.
All right, thank you so much. So that marks the end of the Q&A session. Thank you so much, Anka, for your time.
Thank you so much for having me. It was so much fun. Sylvia, thank you for making this possible.
You're welcome. And maybe before we wrap up that session, you mentioned window dressing. Maybe you can tell our participants what that is in trading. And then you can recommend the trading books that you would advise beginning traders and seasoned traders to read on Forex and stocks and futures.
Absolutely.
Yeah.
Absolutely. Okay, so window dressing is a phenomenon that happens at the end of each quarter. It's specifically more prominent into December. It is a phenomenon that happens, in every market, whether it is the Forex market, the futures market, and especially into the stock market. The explanation is very simple. So portfolio managers like to look smart in front of their clients at the end of each quarter. So when they present their portfolio to their clients, they don't want to show a stock like General Electric in their portfolio, but they want to, they want to seem smart, and they're buying into the last week of that quarter. They're buying stocks like Amazon and Netflix and whatever it was running, into that specific quarter. So they are buying the high flying stocks, the outperformers into that quarter, and they're selling the underperforming stocks, the stocks that have not performed well. So when they're showing, their clients their portfolio, say, oh, okay, so I'm in Apple, I'm in Nvidia, cool. Okay, but they had no idea that they were in American Airlines or they were in GE and they lost money into that account, right? So this is something that they play around with. And us as day traders and swing traders know that if you want to trade like a hedge fund, especially into window dressing, into the last segment of, to the last, let's say 5 days of December, you really want to make sure that you are not going to swing trade these stocks that are beat up, even for short squeezes, because they are just going to be dumped. But then again, Sylvia, there's another phenomenon that happens into the first and second week in January, and that is the January effect. So remember those stocks that were underperformers like GE and American Airlines? Guess what? The portfolio, the hedge fund manager is going to say, we're going to buy them again because that's a good bargain. They're a really good price. So those stocks that have been beat up, they're going to be bought back again in January.
All right.
Yeah, and as far as books, I do recommend, there are a lot of books, technical analysis books out there. I can't really name because I read so many. But I do recommend one book for all the traders, and that is Reminiscence of a Stock Operator. Everybody should be reading this book. It's a really tiny book. I have it somewhere here in my bookcase. It's a really tiny book. You're going to love it. You can find it on Amazon and everywhere else. It's psychological. It's great. It's fantastic. It's a book about Jesse Livermore. I'm not going to tell you more details. You need to read the book. You find it on PDF, on Kindle, on anything. You can read it in an afternoon. You're going to love it.
All right. Thank you for not spoiling the read. And then finally, you can tell us about you did mention about a funded account that works in a similar fashion like a prop firm based on your explanation. So maybe you can give us access to your email. You can mention your email and where people can go to find your work. I know you have a Facebook page and account, and you're also on Twitter. So yeah.
Okay, so my email is info. I'm going to type it in, TradeOutLoud.com. You guys, if you guys want to follow me, my social media handle is TradeOutLoud. It's very easy. I'm on Facebook, on Twitter. On Twitter, I'm more active. I do provide a lot of trading ideas, including these levels. If you guys are interested, I'm posting them every day for the trading session ahead of the New York trading session open, and you could see how they come into full fulfillment.
All right, thank you so much, Anka. We'd love to have you again in the future. Thank you for your time, and we ask guys to continue opening up trading accounts with Scope Markets. You can trade US equities, Forex futures, like Anka has taught us today. So with that, Anka, goodbye, and till next time.
Thank you. Thank you. Thanks so much, guys, for having me here today. Scope Markets and Sylvia for putting this together. Thanks so much. I appreciate you guys. And I would love to have you guys at one of my events.
Sure. Yeah, we should organize for like a workshop or something.
Obviously. I can't wait. Thanks so much for having me.
All right. Cheers.
Thank you.
Bye.
Bye.
Thanks guys for tuning in and sticking with us to the end. We hope you have learned something new. I would like to appreciate Scope Markets for sponsoring this webinar. Remember, you can open a live trading account with Scope Markets and apply the lessons shared by the guest in this webinar to your trading. Many thanks to our guests for speaking to us. We'll be open to have you in the future. Till next time, goodbye.